with respect to evaluating whether there is substantial doubt about the entity's ability to continue as a going concern. All you need to know is the following. As of today, as of your December 31, 2012 audits, it is still the auditor's responsibility to assess an entity's ability to continue as a going concern for a period of time not to exceed 1 year from the balance sheet date. So nothing has changed until FASB completes its project on going concern. I'm sure there are some people in this room that do reviews of financial statements, and if not, you're going to hear this anyway. The AICPA Accounting and Review Services Committee has issued 2 exposure drafts of SARs, Statements on Standards for Accounting and Review Services. One, entitled Review of Financial Statements. This one addresses areas that are applicable to a basic review engagement. The second one, Review of Financial Statements, Special Considerations, that addresses areas that are less frequently encountered. Basically, what they're doing with these 2 proposed SARs is they're using the Clarified Auditing Standards drafting conventions. They're doing with the SARs what the Auditing Standards Board did with the SASs. They're clarifying them. Well, there are several, actually, quite frankly. First of all, obviously, the new clarity standards, which are going to impact all auditors. Obviously, tax practitioners won't be concerned with them, but I'm dealing with auditors, and specifically auditors of not-for-profit entities, and I think the clarified auditing standards would be up at the top of my list. They're new. They're effective for years ending on or after December 15th, 2012, and although there are not a lot of substantive changes from the old extant standards, there's still enough changes where auditors need to be aware of them. The second one would be the activities of the Not-for-Profit Advisory Committee, which is a committee that is set up as a standing resource to the FASB on not-for-profit accounting, reporting, and disclosure issues. They've made some recommendations to FASB, which has resulted in FASB starting 2 projects. One, a standard-setting project on not-for-profit financial reporting, and the other one, a research project, which will talk about other communications by nonprofits, such as a management discussion and analysis. So that's an area that practitioners really need to stay aware of and monitor what's been going on. The third area in the not-for-profit arena is the 2011 Yellow Book, which is Government Auditing Standards. That one became effective also for years ending on or after December 15, 2012, and established new auditing standards under Government Auditing Standards, which kind of harmonize with generally accepted auditing standards, but there still are some subtle differences between the 2 sets of standards. The independence conceptual framework that's adopted by the 2011 Yellow Book is new, and also harmonizes with, doesn't adopt, but harmonizes with the AICPA independent standards. So again, practitioners that do Yellow Book audits should be very much aware of that document and read it and understand it. The fourth area, the FASB and the International Accounting Standards Board has been working for several years on some joint projects to harmonize standards. And the 2 projects that are coming to fruition is the Revenue Recognition Project, where they hope to have a final standard out this year, and the Lease Project, where they hope to have, the FASB hopes to have a revised exposure draft out in the next several months. Practitioners should be aware that these are ongoing, should at least gain an understanding of what they're talking about changing. Neither one will be effective in the very near future, but they will impact many, many not-for-profit entities, and also for-profit entities. And the fifth area that I think is of real import to the not-for-profit sector this year is the new legislation that is scheduled to be proposed in the New York State Legislature as part of the revitalization of the not-for-profit sector in New York State. There'll be new rules, laws, and regulations that will impact nonprofits in areas such as governance, executive compensation, and other areas of interest to nonprofit organizations, their auditors, and those charged with governance of nonprofit organizations.